As we head into SoFi's Q4 earnings results on January 29th, this week has been one of the most important jam-packed weeks for news for the company. SoFi laid off hundreds of employees this week, and we received updated short interest numbers. And to top it all off, all the large legacy banks reported earnings earlier today. So a lot of news to cover. Let's jump right into it. Huge news week for SoFi, as I mentioned. The stock price, as usual, was a roller coaster, ending off the week down 5%, falling back below that $8 range at $7.85 as of this recording. In this video, I'll be running through all the SoFi news I saw this week. I do this every Friday, and if you're new to this series, subscribe and follow along for more. Monday started off the week with SoFi taking home 3 awards from Nerdwallet's 2024 Best of Awards. The awards that SoFi won were number 1, Best Checking Account Overall, which is a huge award. Number 2, Best Checking Account for Overdraft Fee Avoidance for SoFi Checking and Savings. And number 3, Best Personal Loan Overall for SoFi Loans. Now, the reason why this is important and not just, an award that SoFi won is because SoFi's name will be all over Nerdwallet's recommendations, especially in the Best Checking Account Overall section. As soon as you go to Nerdwallet and you take a look at, getting a new checking account, SoFi's name will come up at the very top of that list. Why that's important? Because Nerdwallet gets around 36 million hits per month on their pages. So this is a really big deal overall for awareness for SoFi's checking accounts and should help boost up that member growth as well. On Tuesday, we received news that BMO initiated SoFi at a market perform with a $9 price target. Now, there was a little bit of a confusion here whether this was a buy rating from BMO, and I just want to clarify that this was in fact a hold rating for BMO, not a buy recommendation. However, this does come from a highly recommended 5-star analyst on TipRank, so it does carry some sort of weight with the market from a reputational perspective. But last week we had the inverse situation with a KBW analyst who was also 5 stars, who flat out had not a great analysis on SoFi, which we broke down in the last SoFi Weekly. So take the stars with a grain of salt. Now, later that night on Tuesday, Tanner broke the news around SoFi layoffs from individual posts on LinkedIn of employees who had been let go, making posts on LinkedIn basically looking for other opportunities. Now, I made a video on this Tuesday night, so I really won't go into too much detail here on the specifics. For the full details around everything with regards to SoFi layoffs, watch that video that I made on Tuesday. At a high level, the rumors were made on various forums online, such as Blind, that SoFi laid off about 7% of total headcount, or around 300 people across different departments, with an emphasis on engineering, which the rumors stated saw a 20% cut. Now, my high-level take, and you're going to hear this throughout this video, January is a month that is common for rifts to happen, for layoffs to happen, as it's the beginning of the year and there's lots of companies that essentially rebalance their teams. And this is generally good practice from an operating standpoint as it reduces operating expenses. And SoFi is very much actively hiring, with many individuals across different departments that have already started in January. You can just do a quick LinkedIn search of people who are posting about their new jobs. You can also go to SoFi's career page where you can see how many people they're hiring. So the company is definitely not slowing down. And to confirm that, the following morning on Wednesday, we received confirmation from SoFi's investor relations account on X around the layoffs. The statement read, "We conducted a small reduction in force yesterday. We plan to continue to grow our team in 2024 and remain committed to continuing to deliver strong GAAP profitability and grow tangible book value by doubling down on our most important company priorities. While the headcount reduction was less than 4% of the total population and broad-based across the company, it's always hard to separate from value team members, and we'll be doing what we can to make the transition as seamless for them and for the team as possible." So one thing immediately off the bat that was cleared up in that statement was that the reduction was 4% of total headcount rather than the 7% initially rumored, so slightly smaller. They also reiterated their intention to keep growing the team in 2024. And the other positive was that they reiterated their commitment to continuing to deliver strong GAAP profitability, which I thought was an interesting choice of wording. Why would they say continuing GAAP profitability when they've never actually been GAAP profitable? But of course, I don't want to speculate on that too much. Also on Wednesday, we saw Deutsche Bank initiate SoFi with an $11 price target and Barclays reiterate their $10 price target. One thing I'll say is that I love seeing these double-digit price targets, and I think once SoFi guides for full year profitability in a couple of weeks, we're going to be seeing a lot more double-digit price targets coming very soon. Moving on throughout the week, on Thursday, we received some news around the TGL Golf League, which Bloomberg reported is receiving investment from Formula One drivers as well as a Manchester City football player, All good news on that front, and we expect the media coverage around it to heat up more throughout 2024. But if you'll remember, the reason I'm not focusing too much on this right now is because in November, the roof collapsed around the TGL golf facility down in Florida, which delayed the start of the league by a year. So that's going to be going live in 2025, although we've talked at length around how prominent SoFi's branding is on that arena and how successful SoFi has been with SoFi Stadium. Also on Thursday, more importantly, more pertinent, we got updated short interest numbers. As of December 29th, SoFi short interest came in at 118 million shares sold short, down from 128 million shares sold short on December 15th, and down even further from the 2023 record on November 30th, where they reported 142 million shares sold short. Meaning that throughout December, we saw a lot of short covering, which is expected to continue as we head closer into the earnings on January 29th. However, of course, the flip point is that the stock price has also taken a hit over the past 2 weeks, and so those shorts are not necessarily as underwater as they were 2 weeks ago. They're actually covering their positions once the stock price is down. Finally, this morning we got legacy bank earnings. JP Morgan, Wells Fargo, Bank of America, Citigroup, they all reported their earnings. Mostly the reports were mixed. It was not, blockbuster quarters for all of these legacy banks. The high-level trend that I saw was many of these legacy names were beating on the EPS line, the bottom line, and they were missing on the top line, the revenue line. Citigroup also said that it's cutting 10% of its workforce, which equates to about 20,000 employees. This goes along with their CEO's plan to restructure the company, which we've talked about in the past, which just further confirms my point that January is a month where layoffs are business as usual. BlackRock laid off 600 people, Unity laid off people, Spotify, Citigroup, all did the exact same thing over the past week and a half. And we can expect this to also continue throughout the end of the month because January is essentially the start of the new year when companies restructure. Overall, what I'll say is that we're 1 week closer to earnings, and it's not great that SoFi's been falling. I know that, I recognize it, but the market as a whole has been beginning to retrace in the new year, and we'll see what happens, as we head closer into that earnings. Join us later tonight for SoFi Weekly Podcast on this channel, where we're going to discuss this week more in depth. For right now, this is the Fundamentals of Investing Podcast. Thank you so much for listening.